Hey everybody, Economic Ninja here. I hope you're doing great. I've got an interesting story about a possible bank problem in India. Why would you think that I would be looking at India? Well, quite frankly, where there is smoke, there is fire. And there's some very interesting stories that have been coming out about very interesting bank, and it's called Yes Bank. I'm going to end with this story because it's the most current, and it's entitled Down 37% from 2022 Highs. Is the Yes Bank share price a bargain? I'm going to end on that one, but I'm going to start with some older news stories dating back to this last December. And you're going to start seeing where there's some very interesting things. Remember that India is part of the BRICS alliance. It was one of the founding members of the BRICS nations that are starting an entirely new way of doing finance, a whole new way of doing international commerce and trade. It is going to be it is one of the main catalysts behind the movement, besides Brazil, South Africa, China, and Russia. And if we see the BRICS nations starting to have problems in their banking sector, I think it is going to be very interesting. I've been following and reporting to you guys the problems in both the European banking sector and the American banking sector, but this is very interesting. Okay, so let's dive back. And again, this bank is called Yes Bank. And let's start with a news story 3 months ago, and it's entitled India's Yes Bank reports surprise 80% plunge in quarterly profit. 80% plunge. Now, this is back in last December. I'm sorry, this is out in January, but they're referring to the fourth quarter of 2022. It says India's Yes Bank reported a surprise 80% plunge in quarterly profits on Saturday as provision for bad loans increased. Net profit fell to 515 million rupees, which equal a little over 6 million US dollars for the 3 months ending December 31st, from 2.66 billion rupees 1 year earlier. Analysts had expected profit to rise to 3.36 billion rupees. Isn't that interesting? Once again, the professionals are always wrong. Right now, as we watch this international banking collapse happening, it says the bank's asset quality improved. And I've got an interesting story about that, okay? Improved as gross non-performing assets declined to 2.02% of total loans. Now remember that word, non-performing assets, from 12.989% in the previous quarter. So you're thinking, how did that happen? How did we see the bank's asset quality improve of non-performing assets, right? Assets that they have on their books that are not doing well, okay? They're not making a profit, at least, especially a good profit, and possibly costing the bank money, right? They're the bank's liabilities. How could they go from 12.89% to just really at 2% from the previous quarter? That is astonishing. Stand by, I've got some info for you. The bank also aims to recover around 10 billion rupees in the current quarter. Now, this alone is very interesting to see an 80% surprise plunge in revenue, right? That's bad. That's really bad for any bank. Check this out. Let's go 1 month prior. 1 month prior. So December 17th, this news story came out, and it's about KeyBank. And remember, this article that I just read to you was based off of a quarterly report, Q4 report. Check this out. JC Flowers completes acquisition of non-performing assets from Yes Bank in India. It says on December 17th, JC Flowers and Company, a leading private investment firm dedicated to investing globally in financial services industry, announced today that JC Flowers Asset Reconstruction Company, the ARC, has completed the purchase of a pool of non-performing assets with a principal balance of 480 billion rupee, which is approximately $6 billion from Yes Bank, a Mumbai, India-based bank. Now, let me explain what JC Flowers is. Essentially, JC Flowers takes advantage of situations where they can come in and banks need to clean up, or financial institutions need to clean up their balance sheet. And JC Flowers comes in and buys these assets for pennies on the dollar and literally turning them from non-performing to performing, right? Because almost anything could be a performing asset if purchased properly at the proper price, right? That's why it's so important whenever we're buying an investment, we're purchasing, we're doing something, we're investing our money. It's all about the deal. When you make the deal is when you make the money, right? Or you lose the money. It's not the day you sell it, it's literally the day you buy it. When you start to realize that, that's when you become the next JC Flowers. It says the portfolio purchase was 112 billion rupee or 1.4 billion as of March 2022, adjusted for activity since that date. Post acquisition, the ARC. Don't you love that term too, the ARC? Here, you know what? Let's take your non-performing assets, pay pennies on dollar, put them in this other entity, and it'll float around and it'll save the bank, and we'll be able to make money off of it, right? But it's really a shell game that's going on as we watch these banks implode right now. The ARC will act as the manager of the portfolio workout to optimize recoveries. With a number of key personnel having worked on the portfolio at Yes Bank, the ARC purchased a 15% vertical slice of the NPAs, while Yes Bank will retain the rest in the form of security receipts. So they still get ownership, right? But they're in a different type of vehicle. So they're not going to show up on the bank's balance sheets anymore, right? So they can show, and we're going to get to the most recent article about this, because their shares have plunged, and hey, maybe things look good because it's been cleaned up, all right? But that is not the case. These poor assets are still sitting on someone's balance sheet, and they're going to weigh down either the bank or eventually a central bank or possibly a government as they come bail them out. The portfolio consists of non-performing and underperforming large corporate loans with significant real estate and infrastructure assets. This is what I've been talking about, commercial real estate imploding around the world, not just America, and it is going to get worse and worse. And banks do not want people, or especially investors, knowing this. Now it says JC Flowers also announced it has entered into a strategic partnership with Yes Bank, in which the bank will purchase up to a 19.99% equity stake in the ARC. So now not only do you have the ARC taking these underperforming loans or assets, instruments, right? Investment instruments. Now you have Yes Bank committing to a 20%, right under 20% loan, probably because they need to stay a minor shareholder or something like that. So now they still own technically these crappy assets just sitting in a different investment vehicle. This is how numbers get switched on balance sheets and things like that. And this is where investors get really in trouble. The investment will be made in two tranches. The first, 9.9% completed as part of this transaction, with the remaining investment to be completed subject to regulatory approval. Now it says there's been a lot of interest in India from global investors, but very few actual transactions. And we believe our partnership with JC Flowers ARC can serve as a model for other Indian financial institutions to follow. And this is the CEO of Yes Bank. So pretty much what he's saying is, oh, hey, all you guys, all my buddies that are broke because you've got the banks are doing bad, they're not performing because of the bad loans that we made. Go ahead and put all your bad crap into this ARC. And what's really scary is, where are those assets going to end up? That's what people need to be worried about. Are those going to end up in a pension fund? Are they going to end up on the balance sheet of a certain government? That's an owed back, with interest or with taxpayer money being paid for these horribly bad investments. Now, it says here, the transaction generated support from several key investors in the JC Flowers funds, among with investors in Lingodo, a wholly owned subsidiary of the diversified holding company for EXOR Nevada NV Capital. Anyway, sorry, long story short, it's got a long name. So a little bit about Yes Bank. It's a full service commercial bank providing a complete range of products and services and technology-driven digital offerings catering to retail and corporate clients. Yes Bank operates its investment banking, merchant banking, and brokerage business through Yes Securities, a wholly owned subsidiary of the bank headquartered in Mumbai. So this is a full-blown bank, right? All the services you'd want. Now, before I get to this story about the stock being down 37% from its 2022 high, Goldman Sachs just announced that it's maintains Yes Bank at neutral. It says right here, a Goldman Sachs analyst maintained Yes Bank at neutral and a price target of $16 from a prior price target of something happened with the story, it messed up, but it says Yes Bank stock price closed at 15.40. So pretty much they're calling for $16 and it's sitting at 15.40. So they're really not expecting a lot, but that is what's to be expected before a bank sort of goes under, right? So what you're seeing is a major bank in India that's going through a restructuring. So check this story out. This is just from a couple days ago, down 37% from its 2022 highs. Is the Yes Bank share price a bargain? It says, it talks about the share price hovering near its lowest level since November last year as the outlook of the Indian economy waned. The stock was trading at 15.40 on Thursday, which was 37% below the highest point of 2022. It has underperformed other popular Indian banks like Axis Bank and HDFC. Now, it talks about the India economic slowdown. There were three main catalysts for the Yes Bank share price this week. First, the company published its financial results, which showed that the company made some modest progress during the quarter. Its deposits rose to 218,000 during the quarter. Deposits rose by 10% on a year-on-year basis. Now, I got to be honest with you. If I'm looking at that, I don't put a lot of credit into it because it's very similar to the sloshing of money that's going on in America right now because of the current regional banking crisis. We just saw banks like JP Morgan Chase bring in, I want to say, upwards of $80 billion in capital inflows coming in because people were leaving their smaller banks and putting into a big bank in fear that their money was not safe in those smaller banks. So right now, I don't take a lot of credit because we're seeing so many banks reorganize around the world. They're restructuring. There's all kinds of issues, and investors are starting to flee certain banks and move into other banks. So we can't take that as a vote of confidence. Now check this out. Yes Bank share price reacted to the shock interest rate decision by the Reserve Bank of India. Contrary to what analysts were predicting, the bank decided to leave interest rates unchanged at 6.5% because the economy is starting to crumble. They cannot deal with higher interest rates. Nobody is borrowing money at these elevated levels of debt, and so they have to hold things positive. So everything goes, wild, right? When they finally pause, that's that next spot to pivoting. In a statement, the bank's governor said that the outlook for the Indian economy was tampered by additional downside risks from financial stability concerns. Still, the bank said it will continue to watch inflation numbers to determine whether to continue hiking rates further. Yes Bank stock has been in a downward trend at the end of a 3-year lockup expiration of the biggest banks in India. Starting in March, Indian banks that helped rescue the company were able to sell the stock. So obviously, if they start selling, it becomes a deluge of sellers. You have more sellers, less buyers. You're going to have some issues there, right? Therefore, the shares could still come under more pressure in the coming months. And remember, every time a bank stock sells off, it is more difficult for them to gain more credit and more credibility with their investors. And it could spill over to depositors' sentiment. So that's another big thing. So I wanted to cover this because there's not a lot of information out there on the internet for Yes Bank. It's very interesting because it's a good-sized bank in India, and a lot of people say, "Well, hey, it's not the biggest one, Ninja. So what's gonna matter?" Well, just like you saw our regional banks in America start to totally collapse, the Federal Reserve have to move in, the government backstop it, the depositors through the FDIC. You have to understand that once the dominoes start falling, they can get bigger and bigger. And as the momentum picks up, those small dominoes can start knocking over big dominoes. And I just want to bring this to you. So the questions are, and I'd love for you to leave your comments. What do you think about this story? What do you think about this bank? Yes Bank, do you think that it's going to pose a threat to India into its greater banking crisis that's brewing right now? And like I said, where there's smoke, there's usually fire. So guys, thank you so much for watching. I really appreciate it. Can't wait to bring you some updates to this story because I have a feeling we're going to be hearing more about Yes Bank coming this fall. All right, guys, that being said, the Economic Ninja is out.